traders, and welcome to a new week in markets. Look, even though it is a new week in markets, look, this market is still trading an old theme, and that old theme is Trump and Trump's tariff policies. So Friday, US markets, US equity markets were trading heavy, or trading negative. Late US session, Trump did start talking about tariffs. And what he did mention is that there would be some flexibility with tariffs. Using that word flexibility, market loved it. So US equities that were trading heavy and negative turned around, and we saw a positive, marginal positive close in equities. Okay, so the main game though for the market and the tariff policies obviously going to happen next month, which is super close, less than 2 weeks away, April the 2nd, which Trump calls Liberation Day, and that's when reciprocal tariffs come into effect. Now, we have heard some noise from the White House just before markets open in Asia this morning that there will be targeted reciprocal tariffs instead of just a huge blanket reciprocal tariffs on every single country that has a tariff with the US, and those targeted maybe reciprocal tariffs will be more aligned to countries that have significant trade ties to the US. So yes, we just had that information before market open. Market viewed that as positive, and we've seen risk rally to open the week. So maybe that flexibility that Trump was talking about on Friday was with respect to this. Having said all of that, look, there still is a lot of uncertainty. We won't know exactly how this reciprocal tariffs are going to work until April the 2nd. And one of the things that markets don't like is uncertainty. So look, I'd imagine that it's still going to weigh on markets. We're not going to see some huge equity rally yet. More choppy trading, I'd suggest. But come April the 2nd, market will make a decision on these reciprocal tariffs. If they're not as bad as what they thought they were, potentially yes, we may see a decent rally in risk in US equity markets. However, if the market doesn't like what they see on April the 2nd, it is as bad as what they thought, or maybe worse, and maybe other countries start initiating tariffs, more tariffs against the US, trade wars, etc. Yes, we could see a decent sell-off. So we need to get rid of this uncertainty. That's the bottom line, and that's coming soon. Anyway, let's move on to a market that is doing exceptionally well despite what is happening with tariff policy, and that is gold. Gold continues to make new record highs. One of the things, and yes, this tariff policy hasn't uncertainty affected gold. It's actually potentially helped gold in the effect that potentially the tariffs is going to slow global GDP and global trade, and potentially there may be a recession on the horizon for the US, etc. Every single time we go into recessions now, we see central banks printing money, and gold certainly loves when central banks print money. So look, that has actually potentially helped gold. Look, other things, we've also still got geopolitical problems in the Middle East that certainly aren't going away. Gold loves that. We have seen central banks still cutting rates on their easing cycle. Gold obviously still loves that. And as far as probably the biggest reason that we're seeing for this huge gold rally is that we are seeing global central banks buying gold and adding to their gold reserves, and China being the biggest of that. So certainly gold bulls, when they know that they have central banks buying beside them, makes them very comfortable to stay along and to pay up higher prices. So yes, we have seen gold trade now above 3,000, trade to a new record high around that 30.50 area. We closed around 30.25, which was a new record weekly close for gold. Look, short-term targets obviously probably up towards 3100, somewhere around there, 3150 maybe, if it does get on with the rally. But look, gold certainly is it is volatile. We do see decent retracements. Friday we saw one down towards 3000. But further out, potentially we could get a retracement down towards 2950, which was the previous record highs that gold was sitting under before we saw this explosive move above 3000. So suggest, look, money has been made buying gold on dips. So if we do get gold back below 3000, down towards 3150, that's probably the ideal levels to initiate fresh longs there. And further out, long term, end of year targets. We've had some of the big famous hedge fund managers come out, and they're looking for 4,000. So they're still seeing longer term potentially a lot of upside left for gold. Okay, moving along. Something interesting is happening in the currency space with the US dollar. So the CFTC data in the US, which shows positioning for speculators on the futures market, shows that they have now swung positioning from net long US dollars to net short US dollars for the first time in a year. So speculators now are actually starting to sell the US dollar, and they are short the US dollar. I'd say that a lot of this has been initiated by what's been happening in euro. So a few weeks ago we saw Germany come out with a huge fiscal stimulus package that they're looking to do of 500 billion euro, half a trillion euro, which is a huge stimulus package, which we've seen a very big rally in the euro on the back of that. So euro back up towards trying to get back to 110. We've got analysts now looking for euro to target even up towards 115. Look, euro rallies, it's going to float a lot of boats in the currency space against the US dollar. So if you are trading currencies at the moment, certainly I'd be looking at the euro especially, and if it does start getting above 110, again, yes, that is going to help a lot of other of the majors against the USD as well. Okay, so this week's a pretty quiet week as far as event risk and economic data is concerned, but we do have some global manufacturing PMIs coming out early in the week, in the Eurozone especially. Midweek, Wednesday, we get some Aussie monthly CPI. We also get some UK CPI, which will be important. Both central banks are going kicking and screaming into cutting rates compared to the other big global CBs, so they need some action lower on inflation there. And then we end the week with some Tokyo CPI. That's important because BOJ is raising rates at the moment, and we also get some US PCE inflation data on Friday as well. So good luck with your trades early in the week, and we'll catch back in with you shortly.